Hello, everyone. I'm Warren Pies, founder of 3Fourteen Research, and today we're going to do a quick walkthrough of the 3Fourteen client site for you. On my screen here is the entry portal to the 3Fourteen client site. You can see this is kind of a dashboard layout. Just in general, the way everything's laid out. You have your push research across the top here, your models, allocation and core models in the middle row. And at the bottom is stock selection. The side nav over here, you can get to all the same things, but you can also find our commentary library and our charts library. That's the high level overview. Now let me just bounce into a couple of these things so you can see how the site works and what you get as a client. So first, as a 3Fourteen client, you get one piece of written research pushed to you every week, and a second audio video piece of research every week. So that's two pieces of content every week. You can find those across the top here in this row. We alternate our publications between long form publications, which you can find in this first box here. The most recent one is our 2023 Outlook. Let's look at this. This is the HTML version. Let's look at this in the PDF version down there in that button. So this is the PDF version of the 2023 Outlook. As we write new long form pieces, this is where they show up in that top left quadrant. Model update's the second type of report you receive as a client. Model update is a shorter form report. This one was the week of Christmas, so it's actually really short, much shorter than usual. And you can see here, we go through all the models in the service, how they're moving, what's the message, what are the returns. We track returns for everything in the service. And, just basically recap. It's much more down to brass tacks, no quotes or long form reports. In the long form reports, we can go anywhere we want. We can talk about oil, macroeconomics, Fed policy, earnings, market valuations, anything we want, gold, commodities, energy, anything we want in those long form, but we're restricted to models when it comes to the model update. And that keeps us we go back and forth between kind of the more long form stuff and the shorter get down to performance tracking and what are your quantitative indicators telling you. So we always end this with the chart of the week. This chart of the week was our simple real asset allocation model. It's a little different than usual. Usually we have a more thematic chart of the week. Anyways, so that is the model update. And the final piece of content is our video retrospective. So this is something where Fernando's our data scientist and really someone who I work closely with for all of our research projects. And he's really kind of the mastermind behind some of the larger, more complicated models that we have here. We sit down and talk about what we learned researching the report for that week, some of the things that didn't make it into the report, background details, and then also we update what's happening in the markets in general. So it's just kind of like a client-only podcast. In general, they're 20 to 25 minutes. This one was longer because it was going over our outlook. Of course, we're going to have a client outlook call at the beginning of 2023 as well. And so you also get a transcript of all of that if you don't want to just listen to it. You can always speed it up and listen to it in double or triple speed. So those are the content pieces that are pushed to you as a client. Long form report, model update, video retrospective, 2 pieces of content a week. Now, looking at the models row down here in the dashboard, let's just go across here and look at what these models are telling us. You can go right into the cards. The cards give you a brief overview. Here's our real asset allocation model, real asset allocation page. You can see this is a monthly rebalance model. What happened? What were the weights in September? What were the weights in October? What are the current official weights that we rebalanced at the end of last month, which was November? Today is actually Christmas Eve. So to give you a little bit of an idea of where we are. And then you can go up here and see the model performance. And this is for every one of our models. You'll see we track performance. It's our attempt to bring a little bit of transparency into the industry. Now, one additional piece of data that we provide clients, even though this is a monthly rebalanced model, you can look at what each day's intramodel weights are doing. So you can see how would the model be shifted if you were rebalancing theoretically every day. And I think this is just, if you're someone who loves data like I do, then this is always interesting. You're following this model, you can see, okay, we're coming up on a rebalance here in a few sessions, and this is the way the model is moving. We're reducing alternatives, we're reducing equities, we're increasing fixed income. And you can go across each one of the individual assets and see where those increases are coming from. Down here, you get, basically, you can get a little chart bundle. This goes through the real asset allocation model, historic weights, maximums, minimums, where you're typically falling in the range. You can see that through time. And then you can see it at the higher level asset class, whether it's alternatives, equities, or fixed income. And then you can see how the model performed through various crisis periods. Latest commentary on the model is here. We usually pull that from the model update. And so you can basically come into either the website or the mobile app, and the mobile app really mimics the website in every way, and you can find what we've said about the model, how the model looks. It's basically one stop for all that you need to know about the real asset allocation model. Let's click the intra-period weights off for a moment, and then come up here and look at this. So this is the core real asset allocation model. You can also look at the simple or the original version. The simple is new and interesting. So the core real asset allocation model works off of 20 different assets in the menu. And that's a lot, obviously. And so it's a monthly rebalance. So there is a decent amount of turnover. And I think that there's a certain amount of turnover that you're going to need to accept in this new world of asset allocation as we get away from just a pure 60-40 approach. But some clients obviously want to minimize the turnover. So this is our solution to that problem, and to some of the maybe more ancillary assets that you don't want to have as a core piece of your strategy, like Bitcoin or something like that. So this is a 10 asset version. Again, it's more broad: commodities, gold, managed futures in the alternative section. You have EFA and EM ex China, NASDAQ and S&P for the equities, and then high yield, T-bills, and an aggregate bond index for your fixed income. So much less unique individual assets, but still you get a lot of diversification with this approach. Same underlying approach in this model to the core. It's just a reduction of the different assets that you can go into. Similar to the core real asset, you can go into the intra-period weights, see how we're changing. Again, this is a quarterly rebalance model versus a monthly for the real asset core. So this is going to be substantially less turnover with 10 assets, quarterly rebalance. It's a slower moving model. Let's go down. You can take a look at the PDF. Performance stats, asset weights, same kind of output here that we saw before. So that's your simple version of the real asset allocation model. Once again, just to reiterate, you can see the performance stats across the top row. And so let's go back out for a moment. So that's our real asset card. I'm going to go faster on the rest of them now that you get the idea of how this works. The core models here in this group of 4, we have crude oil, gold, S&P risk, and Bitcoin. I'm going to just bounce into crude oil and S&P risk for this demo, just to give you an idea of how these core models work. Everything is structured the same, so you can imagine how gold and Bitcoin look. This is crude oil. It's a four component model. We have inventories, physical market positioning, technicals. Again, you get our latest commentary here at the top right. This model updates every day. So as a client, you can come in here and see what's happening with the crude oil model every single day. Back test here, performance stats up here. And so this is obviously, a nice little one-stop place to learn about how our crude oil model is going. Let's take a look at the S&P risk model for a second. This is a unique model, so I think it warrants a little side conversation. So S&P risk model is looking for the probability of a 10% or greater drawdown in the S&P 500 over the next 21 trading days, month. So it's only looking at downside. We'll get into that for a second here. You can see latest commentary here. The model's reading is here. Anything over 20% we consider high risk. So at the moment, we're at 36% chance of a 10% or greater drawdown in the market over the next month, which is a high risk market from our perspective. There are, I believe, 84 different indicators in this model specifically, but here are the categories. And this is what we would call a risk dashboard. It's kind of a heat map look. We start 3 months ago, move 1 month, 2 weeks, 1 week, and then present. So you can see how each one of the components of our risk model are evolving over this 3-month period. You can see the overall model has basically stayed high risk from 3 months ago to now. And you can see that within the model, for instance, volatility has collapsed. We look at vol breadth, VIX, we realize we look at vol from a lot of different angles. So volatility has collapsed, as everyone knows. Our model reads this as a reduction of risk, but even with the collapse in volatility, many of the other things, flows, trends, even valuations and macro momentum are staying negative. So that's why the market's showing a high probability of a drawdown. This is the reading of the model over time. Again, this is instructive because you can see that the model will spike up. This is the COVID period, for instance. Let's just center ourselves there for a minute. So obviously the market bottomed sometime in March, April of 2020. The risk model did a good job of getting you out of the market around the beginning of March here. It spikes all the way up into the plus 50% range. It took the model 4 months to come back down and signal low risk. So the model went from high risk to lower moderate risk in 4 months' time. You would have missed the absolute bottom of the market here, and that's how this model works. It's like a really risk-averse investor. And so it doesn't think about the upside, it's only thinking about the downside. So it's waiting for the all clear. You missed the first 4 months of that market rally in 2020. Then the model goes on basically telling you that everything looks good all through the second half of 2020 and all through 2021. You get the first spike into high risk zone in January of 2022 here. And then slowly the probability of a big drawdown continues to climb through this year. So it's done a pretty good job of telling us through 2022 to more or less protect ourselves and protect it on the downside. And that's been really the story of 2022, despite some huge rallies along the way. So those are our core models here. Sector rotation is our sector model. You can see all the components here in this model that go into this approach. Benchmark weight, model weight, and active weight is the difference between your benchmark, which is the S&P 500 weight for each sector, and the model's weight. So your active weight's really where you want to pay attention, because this model is benchmarking to the S&P 500. And so given that it's benchmarked to the S&P 500, it's long only, and sectors, it's really the best we can do, or best we can really reasonably hope for in this model, is to beat the market by 200 to 300 basis points a year. So that's the goal here with this model. Again, you can see the returns across the top. We're trying to just shift against the benchmark on a sector level, and beat the S&P here. So this is the back test again for the model. You can always come in here and take a look at that, how each sector's currently weighted versus the benchmark weight. Finally, the yield optimizer. Let's look at this. This is a unique model for us. It's just for the income investor. We're taking 13 income producing assets and using really the exact same allocation approach that we use in our real asset model to divvy up these assets and then assign weights. And so really underlying the model is hierarchical risk parity. This is a concept that really Fernando brought to me. So we have trend and HRP that work together here. Trend is the first step, and then we basically run a correlation on all these assets, put them in different buckets, and then assign each bucket a weight based on volatility, normalizing the volatility across buckets. So it's a little bit of a twist on your traditional risk parity approach. Same kind of layout that we've seen before. Your performance stats up here. It's a monthly rebalance model. So you have these columns showing how the weights have evolved. Again, you have your intra-period weights that you can click here. You also, one thing I haven't mentioned yet in this walkthrough, introductory reports. You can always find an introductory report across the top here. Let's click in and see what the yield optimizer introductory report was. You can see why we released the model, when we released the model, and the underlying theory behind it. And that goes for every single one of our models that we've gone through here today. You can always find the introductory report up top. So it's very convenient for you if you forget, how does this model work, or why did they build it, or what's it doing here? Okay, so that's our middle row, allocation and core models. The bottom row are our stock picks. These are discretionary picks. And then our quantitative stock selection system, which I think is a really solid model. Let's click into theirs, the full cycle trend system. This is our full cycle trend stock selection system. It is 20 stocks that we select each month. We limit the turnover to no more than 6 new stocks every month. We track the performance of the overall model up top here, just like every one of our models. We have our introductory report over here, which is a very useful introductory report, actually, I think. Let's go to it. And the way this model, because we can use this introductory report to understand a little bit about this model. This model uses really a 2-step process. The first step is to go through, take the S&P 500 and screen out the top 100 stocks by our proprietary quality factor. And our proprietary quality factor, it's similar to a lot of the academic research, but we've done our own work and kind of our own twist on it. We look for stocks that can, more or less have strong balance sheets and can maintain earnings through an entire economic cycle. That's why we call it the full cycle trend system. And so we're looking for earnings stability across the cycle. We grab the top 100 stocks out of the S&P 500 based on that quality screen. We then rank those 100 stocks on our proprietary trend approach. Now, that's what you can see here. So the final model is to grab the top 20 stocks by trend rank. And this is the way we add value at each step of the process in this system. So this is the S&P 500's equity line. This is our quality 100 here. So you can see we add value by just filtering out only the quality names. And then we rank, and this is the end full cycle trend system, the top 20 final stocks. We're adding value across every step in the process. Now, if you want to hold less stocks, this is a 10 stock system here. So we have a 20 stock is the baseline, 10 stock performs even better. And then you can come through here and find all of our descriptive statistics for the model, monthly performance, annual performance, worst drawdowns, when they occur, etc. Let's take a look again. This is the current holdings. You can see we track performance of each holding versus the S&P, sector, company, rank. So if you wanted to do the top 10 system, you go over here, you rank by the top 10, you grab those top 10 instead of the top 20. The greens are the new additions for this month. The reds are the exits. Let's say you want to see everything that's come in and out of this model over the entire history. Again, we're looking for We're looking to be transparent for clients, so you can go through all of our closed picks, when they came in, when they came out. It's we're just providing you as much information as possible so you can figure out how to implement these potential models. Finally is our discretionary picks, as down here, as market conditions warrant, we'll potentially make new picks. We only have 3 right now because there's not that many opportunities in the market yet. And we focus a lot on the energy space. Obviously, that's my background, so clients are interested in that. And the full cycle trend system, by definition, and that's our core stock selection system, is going to move away from cyclical stocks like energy stocks. So it's appropriate to have another way to select and introduce energy and cyclical beta into your portfolio if you're using that full cycle trend system. So these are our 3 stock picks right now. You can see over here when we pick them, you can say, okay, why did you pick that stock? You can go in here and see what the report where we introduced the pick and made it, and go through that and read our reasoning. Again, you can go through here and say, show me the inactives. You can see all our picks from the beginning of the company. You can come over here, sort by ticker, sort by date, and see what we picked, what the market was up, why we picked it, when we closed it out. So that's everything on the dashboard here. Let's look at a couple more things before we end the walkthrough. Commentary library on the sidebar. This is all the commentary that we've produced in the company ever. It's our historic commentary library. You can see we tag each piece of content by model update in red, the retrospective, the video retrospective in yellow, and blue publication banner, which is the long form reports. If you want to come over here, you say, I only want those long form reports. I want to see their history of the long form research. You can click this publications, check, you get a filtered list of our publications. Now, one other thing, we publish a chart book every quarter. So let's say you want to see our chart books. This pulls up all of our chart books. The idea here, 60 to 70 pages of charts to tell the story of the market, really in our outlook in pictures. And so I always liked a good chart book through my career. And our goal here was to have really the best possible chart book on Wall Street. So I think we compete well with any others that are out there, I believe. If you go through here, you can see this is our Q4 version. Some of the charts they're data intensive, so they take a while to load. This is a chart looking at how high yield and investment grade credit spreads move with equity price changes, financial conditions view. But we go through the entire market from top to bottom and really tell the picture, the story in charts. So that's our chart book. This is our library. One other area of the site, charts library. So these are charts that run every day. If you're a client, you want to keep tabs on something we're doing, you can request that we put one of our charts from the service into production here, and it'll update for you every day. You can bookmark those and watch the indicator evolve. You can see, for instance, our recession probability model here, what's happening there. That will update every day. You could look into how our Saudi OSP spreads moving, important things that we keep tabs on in the chart section. Again, this is constantly growing. You can filter by topic. Let's say you just want the oil charts in the service. Go over here. Let's look at how U.S. petroleum inventories have changed. So there's a lot of stuff here. Clients often use these charts in their internal communications or in communications to clients, and you can always do that as a 314 client as long as you have attribution to the chart. It's a key part of the service. And that really is about it. Really appreciate everybody checking us out. If you have any questions, please reach out to us. Thank you.